Hello, I'm Bill Wade, Chief Financial Officer of Mentor Schools, and I want to take a moment to talk to the community about the impact that the sexennial evaluations being done by the Lake County Auditor's Office are going to impact your property tax values and our revenue here in the district. First, I'd like to start off with just explaining to the community a few basic principles about property tax and how it impacts our revenue here in the district. One of the most important things that you may want to be familiar with is how to calculate your property taxes. The property tax calculations are a little bit convoluted, but try to break it down in a simple factor for all of our community members. So the first thing you do, you have to figure out what your home value is. You could go to Zillow or a place like that and kind of get an estimated value of that. But for property tax purposes, you only take 35% of that value. So we used it as the assessed valuation is what you'll be taxed on. And then you're going to multiply that by the effective tax rate, which includes our fixed rate levies, our fixed sum levies, and our inside millage, which I'll explain more in a second here, which will give you your initial tax bill. You'll subtract the state-paid reimbursements, the owner-occupied and non-business reimbursements that you may qualify for, which would then give you your current tax bill, which you could confirm on the Lake County Auditor webpage. But to kind of understand taxes in Ohio, you have to understand that there's basically three pots of tax money that comes from. Our district receives money from the inside millage, which is a Ohio Revised Code mandated millage rate that we get. It's unvoted. Ours is 4.8 mils. It does see growth with revenue, and I'll explain that a little bit more here in a second, and it's a single constant rate that doesn't change. We also have two types of other levies that we have in the district. We have fixed rate levies, which are voter approved rates, which the majority of our levies are fixed rate levies. They have limited growth. They can never exceed the initial amount that they raise, and over time, the effective rate will decrease as property values go up, and it can never increase past the voted amount. And it's included in what we call the millage floor. Fixed sum levies are voter approved amounts, and those come in the form for us as an emergency levy and our permanent improvement levy. They have no growth. They will always raise the same amount of money, and the rate is adjusted annually to generate voter approved amounts. So as property values go up, those effective rates will go down. We have 7.69 voted mills in our fixed sum levies. Our effective rate is 7.07 mils. Our fixed rate levies, we have voted in 67.8 mils. However, because of inflation, the effective rate's been lowered to 21.03 mils. So our total effective millage rate in the district is 32.898 mils. The big key takeaway, and the reason why we're talking to you today, is because we're not at what's considered the 20 mil floor. The 20 mil floor is the lowest effective millage rate that you can have by law in the state of Ohio. Our effective millage rate is above that. So what happens in Mentor, and this isn't the same in other communities. Other communities are at the floor, so when their valuations go up, they see a proportional increase in their tax rates. But what happens is that values go up, effective millage rates go down until you get to the floor. And we saw this back in 21 when we had the triennial update, and we saw an increase in property valuations of about 20%. And what happened is our effective rate went down by 13.23%. And again, it didn't go down by a proportionate amount to the increase because of the inside millage. One of the things I do like to point out in this graph is it shows in 16 we did see an increase. This was because there was a voted approved millage increase in 2016 by the voters, which saw our revenue go up by 13.37% that year. But typically, you can see in the other years, in 15 when it was a triennial update, and 18 when it was a sexennial update, we saw corresponding decreases in the effective millage rates here and here. So why we're talking today is because our county auditor has let us know that we're seeing higher than typical increases in the valuations than we have in the past. Just last year, Geauga County saw a 29.5% increase. So when we did our forecast that we do twice a year in November and May, I projected that we would see a 30% increase in our valuation. And you can see correspondingly that we're going to see a decrease in the effective tax rate to about 19.24%. And then going into our out years, the next triennial update, I'm assuming it goes back closer to what a more traditional range is, about 10.36%, which will see a decrease in the effective rate to about 5.38%. So kind of like taking this all again, and again, it's a very complicated, convoluted process, but just showing some graphs here, what happens is our voted millage rate is this top green line. It doesn't change except for in 16, like I showed earlier, where we saw the voted increase. You see an increase, and then that voted millage rate stays this way. What happens over time because of House Bill 920, which was enacted in 1976 to protect voters against inflationary increases, the effective millage rate then decreases as the prices of values of homes go up. The 20 mil floor remains constant. Again, that's the Ohio Revised Code. We can't fall below that floor, and as you can see, we're above it. But after this update, we're going to be very close, and we would expect to be on the floor near 2027 if we don't seek any additional revenue. And then our fixed sum levies maintain relatively constant. They always collect the same amount of money, and they will decrease the effective rate over time. So when we look at our revenue, which is the blue line, versus our expenses, which is the red line, and I have this graph in here because it takes us back to 2002, which is the second to last time that we passed new levy money back in 2004. So you can kind of see the increase in revenue there, and then the levy in 2016, which we improved, you see an increase there. But you can see in the intermediary times that our revenue in a school district is relatively flat. We don't see much growth, again, except for on valuation increases based on the inside millage, which historically has been in single to low double digits, or when we see new construction in the district in various areas. And as we all know, we don't have a lot of new construction going on in the city of Mentor or in the Mentor Exempted Village School District. We are atypical when we compare us to other municipalities. The county receives increases in revenues because of sales tax, and how as things go up in price, they receive additional sales tax revenue. As all of our incomes go up, the respective cities that we live in will see an increase in the income tax. But districts are primarily funded through property tax. That's the primary mode of funding a district, a school in the state of Ohio. That's why when you look at your tax bills, anywhere from 50 to 65% of that tax bill is going to come back to the school district, because that's what property taxes in Ohio are used for. So, again, because of the way that the laws are and what I've explained previously, we don't see an increase in that, and our revenues are relatively flat. The only time we will see an increase predominantly is when we have a voted tax increase, and again, we've only had one since 2004. So what does this mean for me as a taxpayer? If my property valuation is going to go up by 30%, will I see a 30% increase in my taxes? And the simple answer is no. You are protected by House Bill 920 because we're not at the 20 mil floor, and it won't be a dollar for dollar comparison. Ultimately, what you're going to see, and I've calculated this for you, is that for every $100,000 in market value, you're going to see an increase of $50. So if my property value on Zillow is $300,000, I'm going to see an increase in my tax bill of about $150. And then you can kind of do that from there based on the price of your home. And the other question you may be asking as you're sitting there watching is the district going to see a 30% increase in their revenue? And as I've stated, we won't. We're only going to see growth on the inside millage, much like the taxpayer, because we're not at the 20 mil floor, and we will be protecting the taxpayer through House Bill 920, which will take into account the majority of the inflationary increases that we're going to see because of property valuations going up. Ultimately, we're going to see a 2.3% increase in our revenue, which equates to about $2.5 million. And our revenue as we closed out this last fiscal year is about $109 million. So we're going to be around $111 to $111.5 million annually is what we're expecting in revenue in our out years of our forecast. Happy to answer any questions that you may have. Please contact my office or reach me through email at wade@mentorschools.org. And I would look forward to providing any information I can to help you understand or better predict what your tax increase may be because of the property valuations that are coming forth. Thank you very much. Appreciate your time.